Now that I've finished discussing pre-formation issues, we're going to talk about non-tax and tax issues to consider when you're deciding which entity you'd like to select. If you're a student startup developing a non-technology product or service, there are a number of non-tax and tax considerations you must weigh when you're deciding which entity to select. The non-tax considerations include who are the owners of the company. For example, if you have owners who are non-U.S. citizens or resident aliens, then you're not going to be able to form an S corporation. Another consideration is where is the business to be conducted. Remember that you can set up a business in a particular state. Every business entity is governed by particular state laws. So for example, if you're operating in Michigan, it may make sense to focus on setting up business entities in Michigan, given the purposes of what your company is doing. You also want to consider liability concerns. I mentioned before that if you have more than one founder in a company and you haven't set up a business entity, then you will be considered a general partnership and you will be opening up yourself to unlimited liability for the debts and obligations of the company. If you set up a separate business entity, such as a limited liability company or a corporation, then subject to certain exceptions, you will not be responsible for the debts and obligations of the business. A really big consideration is what are your financing needs? What are your current financing needs and your future financing needs? As a non-technology oriented company, it's not likely that you're going to attract venture financing. And with that being the case, you want to carefully consider whether it makes sense to form a corporation, which is typically required by venture capitalists, or whether it makes sense for these non-tax and tax reasons to form a limited liability company. You'll also want to consider how will the company be managed. Is the company designed to be managed by a number of different people, or is the company going to be managed by one person? If you set up a limited liability company, the management structure can be very simple. Whereas with a corporation, the management structure requires you to have a board of directors. Are you concerned about certain formalities such as having a certain number of meetings and having to take minutes for those meetings? If so, then the corporation isn't going to be the right entity for you to form. The limited liability company doesn't require its owners to have a certain number of meetings. And it's much easier administratively to operate this kind of a company. Another important non-tax consideration is whether you need to compensate your employees or third parties with options. In order to do that, you have to set up a corporation. You are able to set up options for a limited liability company, but it's more complex and a bit more difficult to explain to employees and third-party consultants. There are tax issues that you'll need to understand when you're determining which entity to select. Some of those tax issues include, do you want to avoid paying a certain portion of self-employment tax? As a limited liability company, if you're actively engaged in the management of the company, you'll be required to pay self-employment tax. However, if you are an S corporation, you'll be able to pay yourself profits from the company in the form of distributions and then some in the form of wages, thereby reducing your self-employment tax burden that you have to pay. So another tax consideration is looking at whether there are going to be losses in the company. With an LLC and an S corporation, you're able to take the losses as an individual owner against your personal income, subject to certain exceptions. This isn't the case with a C corporation, and we'll discuss that further when we talk about C corporations.